Welcome to the Deep Dive. Today we're really digging into the utility world. We've got the latest Q3 2025 filings from the Southern Company. Think Georgia Power, Alabama Power, Southern Company Gas, the whole system. And our mission for you is basically to cut through all the jargon and numbers. We want to make sense of their, well, multi-billion-dollar roadmap. We're talking power plants, navigating regulations, and how they're financing all this infrastructure.
Yeah, and you have to start with the really eye-popping number, $16.7 billion. That's roughly the amount Georgia Power is asking regulators to approve for, their next big build-out of power plants and batteries. And just to clarify, sometimes you see these huge figures, and they include something called AFUDC, allowance for funds used during construction. It's sort of an accounting thing. But the $16.7 billion, that doesn't include AFUDC. This is the direct capital cost. It really underscores the sheer scale of what they're planning. It's genuinely massive.
Okay, $16.7 billion. So what's driving the need for that kind of money? Usually we think of utilities as kind of slow, steady growth. But looking at their financials year-to-date through Q3 25, their net income is up. Not hugely, but up. $3.925 billion versus $3.867 billion the year before.
Right, the income growth is there, but the reason for the future spending, that's the real story. It's the revenue side. Retail electric revenues jumped 9.2% year-to-date. Now, some of that is rates, sure, base tariff increases played a part, but the big driver, it's customer growth, specifically huge new customers. Since 2023, they've signed contracts for about 8 gigawatts of new electric load. 8 gigawatts.
8? That's enormous. What kind of customers are we talking about?
Think massive data centers, a lot of new industrial activity coming into the Southeast. They basically guaranteed this demand will show up, mostly ramping up fully through 2028.
Wow. 8 gigawatts in just a couple of years. I mean, can the grid even handle that kind of sudden jump?
Well, no, not as it stands. And that's precisely why they need the $16.7 billion. The demand is locked in contractually, so they basically have no choice but to build the generation and the infrastructure to meet it, and fast.
And you can see that reflected on the other side of the ledger, right? The expenses. Operating costs are up year-to-date. Things like depreciation and amortization. That's basically accounting for the cost of new stuff coming online. And interest expense is up significantly, too. They're clearly borrowing heavily to fund this build-out because, like you said, that demand is coming whether they're ready or not.
Exactly. It's contractual. So let's break down that $16.7 billion. What are they actually planning to build? This ties back to a big lift. Request for proposals, or RFP, that Georgia Power put out. They asked for 8,500 megawatts, ended up selecting just under 8,000, 7,999 milliW specifically. And the choices are, well, they're interesting. It's sort of a two-pronged approach. A lot of natural gas and a lot of batteries. They picked 5 new combined cycle gas units owned by Georgia Power. That's about 3,700 megawatts coming online around 2029-2030. Gas is still the go-to for reliable bulk power.
Okay, gas makes sense. But you said batteries. That feels like the newer piece of the puzzle.
Absolutely. That's the other big chunk. 9 battery energy storage facilities, also owned by Georgia Power. That adds up to nearly 2,800 megawatts. Slated for 2028 through 2030, deploying storage on this scale. It's huge. It shows they're serious about needing flexible capacity, probably to handle those data center loads and integrate other resources.
And it's not just Georgia Power, is it? This seems to be happening across the Southern Company system. Alabama Power, for instance. They're starting construction on a 150-megawatt battery project at the site of an old coal plant, Plant Gorges, looking at 2027 for that one.
That's right. And then you've got Southern Power, their wholesale generation arm. They're doing something different but related. They're busy with wind repowering, taking existing wind farms like K-Wind, Grant Plains, Wake Wind, and upgrading them with newer tech.
Repowering, okay.
Yep.
The filings mention $181 million in accelerated depreciation because of that. Can you break down what accelerated depreciation means for us non-accountants? Why does that matter?
Sure. It's basically a financial strategy. Instead of writing off the cost of the old wind turbines slowly over many years, they're recognizing that cost much faster, declaring them obsolete sooner, essentially. They do this because they're replacing them with much better, more efficient turbines. So it's a way to clear the old, less productive assets off the books faster, making way for the new investment, ultimately helps lower their long-term costs.
So kind of cleaning out the closet before buying new furniture. Makes sense.
Pretty much. And there's potentially even more spending coming. Beyond this initial $16.7 billion, the plans hint at maybe another $4 billion for Georgia Power Resources, plus about $1 billion for expanding natural gas pipelines. Those pipelines fall under FERC regulation.
FERC,
Yeah.
right, the Federal Energy Regulatory Commission. So that billion is for interstate pipelines to get the gas to those new power plants.
Exactly. Making sure the fuel supply is there for those 5 big combined cycle units. It's about securing the whole supply chain for decades.
Okay, so massive spending plans. But this all depends on regulators approving it, right?
Yeah.
Especially the Georgia PSC.
Absolutely critical. The Georgia Public Service Commission holds the keys, mainly through their big planning process, Integrated Resource Plan, or IRP. And the 2025 IRP had some pretty significant decisions, especially regarding coal. Even with all this new gas and battery investment, the PSC approved extending the lives of major coal plants. Plant Scherer Unit 3 gets to run until at least 2035, and Plant Gaston Units 1 through 4 until 2034.
That really is a fascinating contrast, isn't it? Building gigawatts of new stuff while also committing to keep these older coal units running for another decade or more.
It's a definite tension, and it's not just letting them run, they have to spend money on them too. The IRP requires installing new environmental controls, things like scrubbers, and also adding natural gas co-firing capability at places like Plant Bowen and Plant Scherer.
So investing in the old and the new simultaneously, what's the strategy there?
It looks like a dual strategy, right?
Yeah.
Use the new gas and batteries for the huge new load growth, but keep the existing coal fleet online for reliability, for that base load power, and probably to avoid the massive costs of shutting them down right now.
And keeping things financially stable while they do all this is key. That's where the rate plans come in.
Exactly. Georgia Power got its annual rate plan, the ARP, extended through 2028. This is huge for predictability. It locks in their allowed profit margin, the return on equity, or ROE, at 10.5%, and keeps their allowed capital structure, the equity ratio, at 56%.
So that 10.5% ROE, that's the target profit regulators let them earn on their investments.
Precisely. By locking that in, the PSC gives the company the financial confidence it needs. They know they can raise the billions needed for construction and expect a steady, approved return on it. It reduces investor risk.
And we see similar moves elsewhere in the system, aimed at that kind of stability. Alabama Power got approvals to buy an existing gas plant, Lindsay Hill, recovery through existing rates. Mississippi Power got a rate increase approved, adding about $41 million a year.
Yeah, the whole system seems to be shoring up its financial foundation across the board,
Yeah.
getting predictable revenue streams locked in before this huge wave of capital spending really hits.
But there's always a catch, isn't there? You mentioned the environmental controls on coal. What of the bigger federal picture?
Ah, yes. That's the big uncertainty hanging over everything. While Georgia is planning to run coal plants into the 2030s, the federal EPA rules that govern things like ozone, power plant wastewater, that's the ELG rule, and coal ash disposal, the CCR rule, they're all kind of up in the air.
Up in the air, how?
Well, many are being reconsidered, challenged in court, maybe facing repeals or revisions. Even the big greenhouse gas rules are facing legal challenges. So the bottom line is, a utility like Georgia Power has to plan for keeping a coal plant running in, say, 2032, without knowing what the federal environmental compliance costs will actually be in 2032. Those costs could change dramatically depending on court rulings or new regulations. It's a significant risk.
A huge variable. Okay, let's shift gears slightly to how they pay for all this. The financing side. We know it's a mix of earnings, maybe some stock, but a lot of debt, right? We saw Nicor Gas, that's one of their gas utilities, issuing new bonds. Like some do in 2028 at around 4.17%, others way out in 2065 at 5.69%, spreading the cost over a long time.
Definitely leveraging debt. But another critical piece, especially for the type of assets they're building, is taxes, federal tax credits. And there's a major change recently. The One Big Beautiful Bill Act, the OBBB, signed in July 2025. That really shook things up for clean energy incentive.
OBBB.
Right.
How did that change things?
Well, specifically for wind and solar, it tightened the deadlines to qualify for the main tax credits, the ITC and PTC. Basically, projects now have to be finished by the end of 2027 or start construction by July 2026 to get the full credits. It put more pressure on those types of renewables.
Ah, okay. So connect the dots for us. Georgia Power's big plan includes almost 2,800 megawatts of batteries, but maybe not as much brand new wind or solar right now in this specific request.
Exactly. And the OBBB might explain part of why. Because while it restricted wind and solar credits, battery storage projects kept their full tax credits available all the way through 2033.
Oh, interesting. So the tax law effectively made batteries a more attractive investment, financially speaking, compared to new wind and solar right at this moment.
It certainly looks that way. The legislation tilted the field, you could say. Batteries got nearly a decade of tax credit certainty, while wind and solar faced a crunch. So Georgia Power investing heavily in batteries. It aligns perfectly with maximizing those stable, long-term federal tax credits while also meeting their need for dispatchable power for all those new customers. It looks very strategic.
So federal policy nudged them towards batteries, and they're already using these
Oh,
credits.
yeah, they're actively monetizing them. That means selling the credits to other companies that need tax liability reduction in exchange for cash up front.
Right, turning future tax savings into immediate cash.
Exactly. And it's significant money. Just in the first 9 months of 2025, across Alabama Power, Georgia Power, and Southern Power, they brought in over $163 million in cash just from transferring these tax credits
And that cash goes right back into.
right back into funding these huge construction projects. It reduces their need to borrow as much or issue new stock. It's become a really important financing tool in this energy transition landscape. So if you zoom out, you see this really complex picture emerging. You've got unprecedented demand growth. That 8GW number is just staggering, driving billions in investment. The company's responding with lots of gas, huge amounts of battery storage, partly guided by, well, favorable tax treatment for batteries right now. But at the same time, state regulators are locking in long operational lives for old coal plants, requiring new investment there too. All while the federal environmental rules for those plants are, frankly, a question mark.
So let's leave our listeners with this thought. You have this enormous $16.7 billion commitment from just Georgia Power, mostly for gas and batteries. Think about that number alongside the recent federal tax changes that maybe made wind and solar a bit harder near term, and the simultaneous decision to keep coal running longer despite environmental cost uncertainties. What does this combination, massive investment in dispatchable sources, extended coal life, shifting tax credits, really tell you about the company's priorities over the next 10 years? How much is driven by the urgent need for reliable power for new customers versus, say, accelerating towards purely clean energy goals? It seems like reliability right now is king. That's the multi-billion-dollar equation to mull over.